Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn & Associates with your metals market update for this Mother's Day weekend of May 12th, 2017. Now, I want you all to remember, in this video, when I do them on Friday, we talk the weekly charts, not the daily charts. Interestingly, in gold, if you're reading the news, you're going to read, if you didn't, you're going to hear about it on the news tonight. There's been another ransomware attack, this time in the Britain area. It's hit the hospitals primarily. And what do they want to be paid in? Bitcoin. That's the problem with Bitcoin for governments. There's no way to track it. Obviously, that's the whole idea behind Bitcoin. And whether you know it or not, while gold market has just sort of languished, Bitcoin has soared dramatically in terms, I think it's up to $1,700 or $1,800 a coin. Unbelievable what it's done. And they're not real coins. They call it that. It's virtual. It's virtual gold, if you think about it. Pretty nuts, but it's the way that it goes. Now, in the gold market, we've been fighting battles right now, trying to figure out in gold, is the market going to break down again, or is it finding its footing here in the low 1200 area? I read reports this week from Credit Suisse. Some of their analysts are looking for $1,400 by year end. I've read Goldman Sachs, they're in the 1260 range. Nobody's really talking a big decline here, which I found fairly interesting. When you take a look at the monthly chart on gold, all that I see going on is a market that's got a well-established high back here in the end of 2011. This trend line has been at work all the way through. The market has tried in 2016 to get over it. It made a run at it, didn't quite hit it just recently, and here we are in May, slipping back from that April run to those highs. Will the market attack the lower line, or will the market soon be able to break through that line? And when it does, I think you're going to see two things happen. I think you'd be over the 200-day moving average of closes on the daily chart. And I think that on the weekly chart, you're going to see people, because of what it does, and then the monthly on a breakout, start jumping into the market. It hasn't happened. I'm not predicting it will happen. What if it breaks out to the downside? But my job here is to give you the what ifs. When we look at the weekly chart, the market is in an up thrust. That's one of the reasons I'm talking it breaking out to the upside. And it's been pulling back. No ifs, ands, or buts, but the pullback, if it finishes in this area, which it did, it's going to have a positive week for a change. It hasn't had one of those in a while. So interesting what it's done. When we take a look at the market on a closing basis, the low close this week was 1266.90. You're slightly over that coming into the end right here. But I'm going to call the market on a closing basis in a down thrust. You've got the higher high, and you broke through this area right here, so I call it a down thrust at this point. When we look at the swing line, this break is extremely important. Does the break go through 1194.50? Does it fall short, not get through there, and the market start turning up like it's doing now, keep extending and not fall back through this low, and call that a trade low? That's one of the things that, as a bull, you look for. What can I get bearish on this chart? Really nothing just yet. And the reason is, if the market keeps falling, I still have the pattern of a higher high. I've got the higher high, but I got the lower low here. Do you see how that works? What could give me a pattern of a lower highs and lower lows? Nothing on this chart that can happen this coming week. More interesting to me is where the market's at on the weekly in terms of the 100-week moving average, which we haven't yet hit, but the market is trading in between it and the 100-week and the 18-week at 1235.70. When I take a look at Bollinger Bands, it's interesting here too. You have to go back to last summer, the last time you hit an up band. You can come back in the more recent times into December of 2016 when you hit the low bands. And since then, almost 5 months, you haven't done a darn thing in hitting an upper or lower band. So the market's just more or less trading around. In terms of momentum, if you believe momentum leads price, the momentum is still pointing down. So you've got downward momentum because prices are under the 18-week moving average of closes, a downside bias, no trend on the swing line. In the silver market, you went to the lower Bollinger Band, and here's what tells you that market was weak. Notice you didn't hit an upper Bollinger Band again until last summer, and it had no problem coming back and visiting this week's lower band, but that's where it grabbed traction. Now, it is still under the 100-week average, and it is under the 18-week. Yes, it is in oversold territory, but the momentum hasn't turned up. This market still has a bearish bend to it. In the copper market, here you have lower highs, lower lows. Again, the first challenge of the lower Bollinger Band, which happened not this week but last week. It bounced away. This week it hit it again, and again it bounced away. So the lower Bollinger Band, rather, is acting as support. Momentum is still pointing down, and while it's against the Bollinger Band, which I certainly do not recommend selling into, the market is in a downtrend. In the platinum market, the market has no chart pattern in the sense of it has a higher high and a lower low. Now, for a long time, it has had the 18-week moving average under the 100. The market did get over that number for a brief period. Then once it got back under it, it fought its battle there, and finally it got to the lower Bollinger Band. Momentum is still pointing to the downside. Strong resistance is up here in the 971, 977 area, and I don't see an edge in selling lower Bollinger Bands. In the palladium market, the market still has a bent for the upside. Momentum is drifting sideways but staying in what we'll call a bull configuration. Prices are staying over the 18-week moving average of closes. But here, too, there's no pattern. You've got a higher high and a lower low. That's nothing. The bias is up because you're over the 18-week average of closes. In the dollar index, the dollar, like it did here, here, and again now, it's grabbing traction. In other words, it's finding its footing against the lower Bollinger Band. You have what's called an outside week to the upside. So until this week's low is taken out, the bulls grabbed control of the market again. In order to keep it, they can't let this be taken out in the next 2 weeks. If they do, problems, you probably go back to the 100-week average. But if they don't, maybe you get enough momentum to get up to the 18-week average, but there's no trend to trade off of per se. So when I look at all that together, I go, okay, what do you do with something like that? And sometimes there's just nothing to do. And that's in some of those markets where you're at. A lot of the metals just like that, except silver, which I still think has a bearish bend to it. Now, I know a lot of you look at these updates, and over the weekend we get plenty of hits. I mean, it's insane. But if you really want to see the gist of what I do, it's in the mornings in my subscriber videos. That's where I throw out the buy here, sell here, do this trade, here's where you get out. I can really let loose, if you will, in it. Now, for those of you that have had a free trial, I only give one free trial. You might want to take advantage of this. If you type in Ira 20, you can get my research now for a $20 discount. It runs, if you're not a trading account of ours, every 30 days. It's not monthly. It's 30 days, $60. Take $20 off by typing in Ira 20 in the coupon area. If you're a client of ours and want it, it's $40. Take off half that price. So you're going to be ending up at 20. How do you do all that? Well, you go to our website. You'll see when you get there at www.iraepstein.com, you'll see the word research. Click on it. There'll be a drop-down menu. It says become a subscriber. Click on that. Read the information. Fill out what you have to, and you'll be set to go. You can also get there by clicking here. If you're watching me on YouTube, you'll see an icon. Just click that. It'll get you right to that form. And under us, if you want a free trial on many websites, just click. It'll say Ira's free offers. You click that, and you'll be able to get it. And for those of you that want the 20-day trial, let me say this. Just go to any of these that I just mentioned, and you'll be able to sign up for the free trial. Especially on our website, you'll see www.iraepstein.com and a carousel of free offers. Click on any of them, The whole form will come up. Choose what you want. We'll get it in your hand. Mothers, you all have a great Mother's Day. We appreciate you, and I'll see everybody come Monday. Have a great weekend.